In this video, I'll be sharing a $1 Canadian growth stock that just reported record earnings and is still down 60% from all-time highs. In other words, this could be a very solid buying opportunity for patient investors. Now, this is actually a stock within my own portfolio, so I'll also be sharing my thoughts on whether or not I'm buying the dip, holding my position, or selling the stock after these earnings. Anyways, if you do want to see more Canadian content, make sure to drop a like and subscribe for more videos coming very soon. Also, I wanted to thank today's video sponsor, Inverse, which is a free Canadian stock research platform, but more on that later. So the $1 Canadian growth stock is Greenlane Renewables on the Toronto Stock Exchange with ticker symbol GRN.TO. Green stock has been absolutely crushed over the past year, being down 60% from its all-time highs, which means it could be presenting a good buying opportunity for patient investors. Now, if you aren't already familiar with the company, here's a quick summary. Greenlane Renewables is a renewable energy company focusing on decarbonizing two huge sectors that emit greenhouse gas emissions, namely the transportation sector and the natural gas grid. Essentially, the company has innovative solutions allowing them to extract renewable natural gas, or RNG, from biogas, which is then immediately ready for pipeline and engine use. Here we can see bio-waste is produced in large quantities from sources like manure, food waste, and wastewater sludge, which is then converted to biogas through a digesting process. Then at this point, Greenlane steps in and sets up the appropriate biogas upgrading system to extract the RNG, which could be one of three proprietary technologies, including water wash, pressure swing adsorption, and membrane separation. Finally, the RNG is ready to be used as fuel within the transportation sector or the energy grid right away. So in essence, RNG still produces the same emissions as normal natural gas would, but it would have produced these emissions anyways within the landfills and the other bio-waste sources. Therefore, new and fresh natural gas does not have to be extracted from the earth to be able to be burned as fuel. So you can only imagine how important a role Greenlane Renewables is playing as an early leader within the RNG space. Anyways, moving on to their Q4 2021 earnings, we can see here that on March 10th, Greenlane reported record Q4 revenue of $17.1 million, an increase of 94% over the $8.8 million reported in Q4 2020, which beat the $15 million expected by analysts. For the full year of 2021, revenue exploded to $55.4 million, up 146% from $22.5 million last year. In terms of profitability, however, Greenlane posted a net loss of $1.2 million in Q4, or EPS of -1 cent, while analysts were expecting positive EPS of 1 cent. As we can see over history, Greenlane has been on the verge of profitability for essentially the past 2 years, but hasn't been able to make that jump, which is why I believe the stock is still down 60% from all-time highs. However, in Q4, they produced gross profit of $4.3 million excluding amortization, being a gross margin of 25%, while they were able to produce positive adjusted EBITDA of $300,000 in Q4. Now, I do believe that rising inflation and shipping costs are impacting Greenlane's bottom line in the short term, and without these rising costs, they probably would have been profitable. But hopefully they're able to raise prices in the near future to offset these increased costs. Now, as for the full year of 2021, Greenlane had a net loss of $2.4 million, gross income of $14.1 million, or 26% of revenue, and positive adjusted EBITDA of $1.1 million, which also set a brand new record. Now, since Greenlane Renewables is an unprofitable company, and that means they're still losing money, we do need to check if they have sufficient liquidity to fund their operations in the future. And as we can see, Green has cash and cash equivalents of $31.5 million, which nearly doubled year over year, and no debt on the balance sheet, which is stellar. So from their cash flow statement, we can see that Green used $10.5 million of cash in their operating activities in 2021, which means they have about 3 years of operations left before they run out of cash. I personally think this puts them in a solid financial position, especially considering the fact that they have no debt on the balance sheet and they will likely be a profitable company within the next year or two. Therefore, dilution and debt issuance should not be necessary unless this company decides to make another acquisition. Moving along, we can see that Greenlane has a record sales backlog of $50.1 million, which represents the company's ongoing projects that should be completed within 9 to 18 months. Furthermore, their sales pipeline is estimated to be over $850 million, which represents qualified potential projects that could convert into orders within the next 2 years. So clearly, Greenlane is not short on demand by any means, proven by the fact that they got $19.2 million worth of contract wins within the quarter, and this is higher than their actual quarterly revenue. Now, before revealing what I'm doing with Greenlane Renewable stock, I want to quickly tell you about today's video sponsor, Inverse. Inverse is a totally free Canadian stock research platform aiming to be the future social media of finance. Basically, they make it incredibly simple to analyze a stock you're looking at buying, since they gather the financial statements and stock data all into one place. You can compare a stock's valuation metrics side by side with its peers and even see all the insider transactions for a company. For example, Greenlane Greenlane Renewables had 12% insider ownership at the end of 2021, and so far in 2022, we can see on Inverse that insiders have only been buying green stock and there's been no selling so far. You can also share your stock analysis on Inverse in the main feed where you can connect with other investors that are also recommending stocks. I personally find Inverse incredibly fun to use and I find myself logging in all the time to see what other people are buying, so if you do want to sign up for free, click the link in the description or the pinned comment below. And with that said, let's get back to the video. Now, the only problem I can see with Greenlane Renewables stock, and also the reason why I believe it's still down 60% from all-time highs, is because of its low profit margins. As a business with only 25% gross margins, this presents a problem. In order to become profitable, Greenlane is going to have to be very cost conscious and or raise prices over time. Now, some of you may be thinking, well, Tesla has 30% gross margins and they're becoming the most profitable automotive company in the world. And that is a fair point. However, Tesla has certain advantages that Greenlane Renewables does not, such as the ability to mass produce their products, which introduces economies of scale efficiencies, as well as the fact that they earn high margin software revenue from FSD. On the other hand, Greenlane Renewables creates specific biogas upgrading projects for each customer, ranging from $2 to $12 million per project, which introduces scaling complexities since each project is different and it can't be mass produced. But Greenlane does have a plan to improve their profitability over time, which is to increase recurring revenues and profits by adding exposure to lucrative RNG offtake contracts and the associated environmental attributes / carbon credits. So in essence, they plan on earning recurring revenue by having a small economic participation in a large number of RNG projects, which I believe is a good strategy to diversify away from simply relying on these contract wins over time. Now, in terms of Greenstock's valuation, we can multiply their fully diluted shares outstanding of 156.6 million by the stock price of $1.04, which equals a market cap of $163 million. Then dividing their market cap by full year 2021 revenue of $55.4 million, we get a price to sales ratio below 3. Now, in my opinion, for a company that just increased its quarterly revenues 94% year over year, I'd say this is very reasonable in terms of valuation. We can also calculate their enterprise value to sales ratio, or the EV to sales, by first deducting their net cash balance of $31 million from the market cap of $163 million, which gives Green an enterprise value of $132 million. Then dividing their EV by full year 2021 revenue of $55.4 million, we get an EV to sales ratio of only 2.4. So honestly, I think it's quite rare to find a market leading and quickly growing renewable energy stock trading this cheaply right now, and that is why I'm still holding Greenlane Renewables within my portfolio. As for analyst price targets right now, we can see that 5 analysts are covering the stock and their average 12-month price target is $2.72 per share, representing 159% upside. And as for the top 4 analysts on TipRanks, we can see that their average 12-month price target is $2.90 per share, representing 176% upside. So basically, analysts think that Green stock could over 2.5x within the next 12 months, and I think this is extremely rare to find in the stock market. And this definitely reaffirms my bullish thesis on Greenlane Renewables, seeing that analysts rate it a strong buy as well as having a very high price target. So I have been nibbling away at the current prices, but I will start buying the dip much more aggressively if this stock drops below $1 per share, where I believe it is at very good value. Overall, I believe that Greenlane Renewables definitely has the potential to 10x or more over the next decade if they can achieve full profitability and if they continue growing at a rapid rate. I also do think that Greenlane Renewables is an acquisition target right now, since they have a booming renewable energy business and the stock is trading at an attractive valuation, being down 60% from a year ago. So yeah, I'll be holding my Green shares and I'll be averaging down until the next earnings report, where hopefully they'll continue to see very good growth. But let me know what you think down below. Do you think that Greenlane Renewables is a good stock to buy right now? Could you see it becoming a much bigger company in the future? I would love to hear your perspective. But anyways, if you did enjoy this video, don't forget to drop a like to help support my channel. And if you haven't already, please consider subscribing for more Canadian content coming very soon. And with that said, I will see you guys in the next one.